That video cuts out abruptly. Friends and enemies, welcome to a very special Wednesday episode of the Canadian Bitcoiners podcast right here on the CBP Media Network. My name is Joey. I'm here with my co-host, Len. Len, how are you this evening? Things are going okay over there for you? Or what? I like your shirt, buddy. The Your Life, Your Terms, brand new merch. Very nice.
Yeah, I'm so happy to have this. Unfortunately, I didn't wear it in the last stream we did, so no big deal. Everything is great here, Joey. The weather is nice and warm. A little bit windy for my taste, but I'm not golfing today or playing tennis, so no big deal. Joey, how are things over there? You keeping your head still clear of everything and focused at the task at hand? 100K Bitcoin. We don't care about Michael Saylor getting under the radar of the IRS.
Unbelievable. We'll have to talk about that on another episode for sure. But yeah, sure my head's above water here. My wife is outside doing yard work, which will will reflect poorly on me, I'm sure, according to my neighbors. But anyway, we're joined tonight by a very special guest, the guy whose charts I've used on the show in the last month. So we're very happy to see him. We'll introduce him in a second. Len, first though, sponsored by two great Canadian Bitcoin companies. ShakePay, number one, best place for Canadians to buy and never sell their Bitcoin. Four things going on right now. In addition to the always running $30 on your first $100 worth of Bitcoin purchased, they have shaking sats. So if you use our promo code CBP, Charlie Beta Peter, shake your phone every day. They funnel Bitcoin right into your wallet on ShakePay. It's free. It's easy. There's no reason you shouldn't be doing it. They also have Shake Paid. Spend off your CAD balance with the Sats back card, which we'll get to in a second. And you can get your entire purchase comped in Satoshis. I just spent $100 at Shoppers Drug Mart on a bunch of garbage that I probably didn't need. And so I'm hoping I get that back in Satoshis. Then they got the Sats back card, as I mentioned. Anytime you spend off your CAD balance, 2% back for the first $5,000 spent, and then 1% back in perpetuity following that. Finally, Len, I need a break here after all this talking. Got the Shake Squads. You and four friends get together. Every time one of you spends off your card, easy. Okay, 42 Satoshis in the bank for each of you. No brainer. We actually just gave away a bunch of shirts to Tim, who's in the chat tonight, and his team last week for their efforts spending their hard-earned cash on God knows what. I don't want to know. Everyone's got different kinks. It's not for me to worry about. Len, who's the other sponsor?
It is Ledin. And if you open up an account with our referral code below, and if you put 150,000 sats on their platform or 75 USDC and keep it on there for 15 consecutive days, Ledin is going to reward you with 10 USDC. And since you're using ShakePay, you're going to probably have a large stack of Bitcoin on your balance sheet. And if you have bills to pay and you don't want to sell your Bitcoin, Ledin is there to help you out. You can get a loan against your Bitcoin, 50% loan to value, and they'll give you the money and you can go ahead and pay your bills. You're good to go. Also, if you think the price of Bitcoin is going up, look at it. It's just a little bit over 20,000. It's a long way to go. We could get to 25 again in a heartbeat. Use the Ledin B2X feature where you could double up your Bitcoin stack. And if you time the market correctly and you pull out once it goes up nice and high, well, you will now have more Bitcoin on your reserves simply by timing the market and using the B2X feature. The last thing Ledin has is the Bitcoin-backed mortgages. In industry first, it got a lot of attention when this first came out, but unfortunately not available in all jurisdictions. So make sure you check their website if you want to take advantage of that to see where they offer it. But also while you're on the website, check to see what are the rates for their savings and borrowing, because they change on a month-to-month basis.
We actually may be talking about mortgages today, given that many people may be in dire straits in the next little while. We're bringing on Ritesh Jain, who is the co-founder of Pinetree Macro, and a man who you may not know him yet, but if you go to his Twitter feed and search for Canazuela, I guarantee you're going to find some tweets that are not only amusing, but also worth your time. Ritesh, thank you for joining us this evening, sir. How are you doing?
Good. I'm doing very well. And thank you for having me on this show.
Absolutely, sir. So let's first talk a bit about you, your background. Who are you? What are you doing at Pinetree? Give us the story.
So before coming to Canada 4 years back, I was a chief investment officer for BNP Paribas Asset Management in India and Tata Asset Management. At Tata, I was managing $7 billion and a team of 26 people. So at some point of time, I decided that I want to come to Canada. I've been coming to Canada for 4 years before that, every year for my summer vacations. And I realized that a time has come where Indians will be investing abroad because Indians are investing only in India. Time has come for them. India is becoming rich. So, and I had great interest in global macro. In 2019, LinkedIn rated me as among the top 3 influencer in the world of economy and finance. So I realized that, yes, I'm doing something right. Okay. and I started managing my own portfolio in global macro. The results were really good. And now, based on those results, because nobody will give money, hard-earned money to, just somebody saying that, posting some good Twitter charts and saying, here I am, give me money. No. So based on that, I started Pinetree Macro, which is basically an investment vehicle for Indians looking to invest abroad. So it is only for, basically we are looking at only for Indians, as well as money from Middle East, not from Canada and US as of now, because the regulations are much stricter over here. So this is in a fund form, and we've just closed our first fund on 15th of August with closer to $1 million, and that was just only from family and friends. Over the next 3-4 months, we will be marketing this fund to high net worth individuals in India, because the minimum subscription in this fund is $100,000.
What are some of the things that Indian people from India like to invest in when they're investing abroad? I know here in Canada we love our real estate, for instance. I'm curious, what's the primary thing that the Indians tend to focus on when they're investing in foreign nations?
So Indians have not been investing in foreign nations. It's a relatively new concept. You could find ultra high net worth individuals buying properties even in Canada, but mostly in UK and in US. But mostly Indians have been investing in deposits. Over the last few years, over the last 10 years, they've started investing in mutual funds. And yes, they've been investing in some real estate. But investing globally in financial instruments is a relatively new concept for Indians.
That's news to me. I had no idea. So Pinetree is filling a bit of a niche there. That's excellent stuff. That's good to hear. Now, Ritesh, we have to talk about, I don't want to say you're a new Canadian, because it sounds like you're very familiar with the country, the sort of landscape as far as economics and culture. But I look at your Twitter feed and I see a guy who I think has genuine concern for the direction in which the country's going from a macroeconomic standpoint. What, in your view, at the moment, is the most important thing for the average Canadian to be concerned about as far as economic factors that may influence their day-to-day life in the next little while?
Okay, the first and the most interesting thing about Canada is that Canada's per capita GDP has remained constant for last 15 years. No other country, apart from possibly a little bit of Germany, has seen such a stagnant wages for last 15 years. But it did not matter. Why it did not matter? Because foreign money was coming to Canada. We had oil and gas, and we had tourism industry doing very well. Let's talk about all the three things. Foreign money is no more coming to Canada. Emergency Act declaration was a very, very big hit on Canada's real estate. You can look at enough articles out of China where the money will not be. They've very clearly said, as it is, they're not sending money abroad. They're tightening their money supply, money sending abroad. Secondly, Russian money is not coming over here. And we told world that your money is not, please do not bring your money, because with Emergency Act, we can make sure that your money, we can confiscate your money. And this is a G7 country. This is a developed country. Secondly, we could depend upon oil and gas in bad times, because whenever oil prices are going up, Canadian dollar has a positive correlation with oil prices. Because when oil prices are high, we get a lot of capex, prices goes up, our export goes up. A lot of foreign money comes in for capex purposes. But over the last 2 years, because of the policies, I will not get into the policies of the current government, but because of those policies, the correlation has broken down completely. If you draw the charts, we should not be at 131 on USD CAD. We should be closer to 122 or 120 on USD CAD, just based on those charts, which are historical charts. So these two things itself take away the bid on Canadian dollar from me. And then you know that what has arrived can done to our tourism industry. Now, if you're not a productive country where most of the jobs are created only in construction industry, most jobs are created in construction industry. And over the last 2 years, 82% of all the jobs have been created only in government sector. So see the direction the government country is going into. My most productive sectors are not growing. Small businesses are net losing jobs. The biggest place where the jobs are growing in public sector, and public sector is doing a good job, but honestly productivity increase will not happen in public sector.
You
Canada
touched up.
has,
Oh,
you know,
sorry.
Canada has always been an oligopoly. Okay, now maybe it's becoming duopoly kind of thing with power getting concentrated. How do I grow my GDP? I'm just looking at over the next few years. Where do I get my GDP from? I get some GDP from US, right? Because you're next door neighbor to US. That is how it is rubs on you. But clearly, US does not require Canada anymore. We are no more in a Cold War kind of situation. We don't require Canadian skies to flow that, to fly those US planes. You can see that our Canadian Prime Minister did not have good relation with the previous US president. Not that it has changed under the current president. It's not that we are getting any favor out over there. In fact, if I'm an American, I'm more concerned about Mexico than Canada. Why? Because Mexico is where I can offshore my production. Mexico is a young population. Okay, so I would love to have more, have better relation with Mexico than Canada. And German president came over here. It was a great opportunity for us, and I was hoping that we will have something on LNG deal over there, simply because we have resources. But what is the point in those resources if those resources cannot be taken out and exported and used for countries' growth? Venezuela came to my mind because the policies keep on coming, keep on happening. It's the same policies. Why are we not learning from a recent example in the history? A country like India, I cannot even say, something about India because we do not have resources. India does not have resources, but it is still trying to get that foreign money, opening up sectors. Here we are, foreign money is not acceptable to us in most of our sectors because we have a regulatory capture. Now, some of these things existed 4 years back, 2 years when I came, but I knew the things were not bad. After COVID, I think that things have gone clearly on the wrong side. Okay. And our debt to GDP has grown. We are at 115% on debt to GDP today. And as per estimate by Hirschman Capital, there are 52 episodes of countries reaching 130% of debt to GDP, and 51 out of 52 have defaulted on their debt.
That's pretty good odds, eh?
Defaulted is Japan. By next 2 years, we will be 130% of the debt to GDP. Tell me where I get my productivity. Tell me where I get my... We cannot be from 500,000 immigrants you are getting from other countries, because 30% of those immigrants, the latest data shows, do not want to stay in the country anymore, but they cannot afford it.
Wow. You touched upon energy, and this is one of the things I think we're blessed in Canada. And in fact, we have a lot of LNG that we could potentially bring to market and bring to the world, but we haven't yet done so. But in terms of Canada, what are we doing right and what are we doing wrong with our energy in terms of policy and how we're trying to monetize that?
I think at least maintaining the current production, I think there is a lot of smart people are looking at the new project which is under construction or under consideration in Newfoundland and Labrador. It's a big project. I think it is worth more than $15 billion. Okay, over the next 2 years, we might have some kind of a resolution over there whether some kind of money will be invested over there or not. I'm looking at very closely on that. Foreign money is what I require to develop those resources, use those resources, employment generation happens, export those resources, get the those foreign currency, hard currency into the coffers of the country, reduce my deficit, or use that for making the country more productive. The problem is that oil and gas does not make us productive. It does not make us productive. It just papers over the problem. The problems have been festering for some time. Now, if we do not export our oil and gas and don't get capex, those problems are coming above the surface. The problems are always there because your per capita GDP has remained stagnant from 2007 till 2022.
That's kind of an alarming stat. I had never heard this stagnant GDP per capita number. So okay, Ritesh, let's talk a bit about the last 15 years then. I'm only 34, so I wasn't exactly politically keen in 07. And you weren't over here yet, but I would imagine you have some historical picture of where you think things went wrong along the way. Besides maybe the O&G issue and whatnot, why do you think that per capita growth has stalled like this? We're I think, a country of pretty well-educated people by some standard anyway, maybe by number of post-secondary graduates or what have you, whatever kind of education that is, perhaps a discussion for another night. But what have we done wrong here in the last 15 years? And what can we do to fix it now besides the sort of papering over with oil and gas and other energy resources?
So what happened in 2007-8 in US, okay, was the Lehman crisis, okay? The mortgage crisis, the subprime crisis. When those kind of crisis happens, this actually clears the system. The system gets resetted a little bit better. The banks, have better risk management, okay? So after 2007 and 8, okay, but if you see, Canada did not get that kind of recession. Canada did not have any of those problems, right? In fact, today, Canada is, till a year back, Canada was known as the second luckiest economy in the world. The luckiest economy in the world was always Australia, because 35 years without a recession. The second was Canada. Possibly, I think, in this last 20 years, we've not seen the recession. It was in 1996, if I remember it right. Over the last 15, 16, 17 years, we knew that our incomes will not rise, or they were not rising. It's semi-socialist kind of thing. Okay, I knew about that thing. But we were always making money through real estate. That is where real estate prices goes up, your balance sheet looks good. And on the other side, your debt to GDP starts rising. People don't afford your debt to GDP rise, because on the other side, you're seeing your asset size growing. So you're taking more debt. Asset size growing, taking more debt. And then asset size growing, and then you take more debt and you buy more houses. It became a favorite pastime. We knew our salaries will not rise, right? It is exactly same. But you still want to make money. You want a standard of living for a first world nation. What do? Assets and cash flows are two different things, but assets can be converted into a cash flow. And that's what we did. For the first, and over the last 15, 17 years, just look at the charts which I had put over there. US real estate prices increase and US real GDP increase. Canadian real estate price increase and Canadian GDP increase. And now that is also coming to an head. Why? Because Bank of Canada, which till last year was talking about not raising the rates, and you were getting 0.99% from HSBC for a variable rate mortgage, who in their right mind will not take that kind of funding? Okay, right, because 300 basis point negative real rates you were getting. It's all about cash flows finally. Now with this breaking to 5% mortgage rates, which will obviously be going higher. Why? As defaults come in, banks will have to increase the risk premium more than the increase in the interest rates which the Bank of Canada will happen. That will actually squeeze the household income. Exactly at a point of time when the real estate prices are going down and becoming illiquid. I would say more illiquid than going down, because illiquidity premium will now start building in over there. So what happened over the last 15 years, the question you asked, was that we continued building this real estate bubble, and we continued ignoring this bubble because our banks, regulation, and our Bank of Canada just allowed it to fester over there, helped by foreign money. Now all this we have to pay for it because our incomes cannot support those kind of house prices. So we did not do anything right. Let me be honest over here. We did not. We did not bring more foreign competition over here to the country to become it more competitive. We did not bring more small businesses owners over here. Okay. But we became real estate owners, big real estate owners. That's what happened.
That's our bread and butter, as you said it.
Len, that was Ritesh. I gotta say, okay, when we bring guests on here, sometimes they don't really like roll downhill, but you are fucking crushing it, man. Like this is good explanations of stuff that I think a lot of people have some little bit of understanding, whether intuitive or otherwise, that my house is going up in price, but somehow I'm still under all this debt, or I keep on getting a raise, but somehow I can't afford to, buy a new car when I need one, or my cell phone bill is too much, or all these things, right? People understand this stuff, but they don't really know why. And so I got to say, you've done a great job explaining this stuff so far. I can't wait to hear what Len pulls out of you next with the next question.
No, I want to hear his thoughts on the Canadian banking sector, because he laid it out, and that this real estate sector is potentially a bubble ready to be bursted. And if that's the case, who's going to be the bag holder in the end? I think it's going to be taxpayers. But I want to hear your thoughts on the health of the Canadian banking sector right now and for what's going to happen over the next few years.
So the biggest asset on the bank's book, if you were to look at biggest asset in your bank's book, look at the biggest asset on bank's book in other countries. It will be commercial loan mostly. Okay, here it is mortgages. Everybody is, kind of all banks have the same kind of balance sheets, because they don't invest, they don't lend to industry. There is not too much industry over here. So everybody lends in mortgages itself. Now, Bank of Canada says that they are reasonably, insulated because they have enough capital buffer. But let me put it this way: in 2007-8, U.S. banking system was also called the same way. So today, let the prices goes down by 25%. People have already started drawing on their HELOC line. Just look at your HELOC numbers. HELOC numbers have started moving up. Okay, it's a matter of time. Banks will have to stop lending or have to increase massive premiums over there. Okay, the banking results which came out this quarter were not that great. Okay, if households cannot increase their borrowing at household level, house prices don't go up, so that means they cannot take more money out of their homes, then banks are going to be under tremendous pressure. Now, defaulting, going bankrupt are two extreme scenarios. I'm not even getting over there. I don't, because those are the kind of issues which Bank of Canada tomorrow can decide, and all the banks will be solvent. It's all about Bank of Canada because Canada has two choices, actually three choices in front of them over the next few years. They will have to decide on one of those choices. And in one of those choices, they have to allow the banks to go down. But that means 15-20% unemployment and bread lines over here. I'm pretty sure that none of us, when you have a choice, you will not take that kind of okay. So I'm not becoming negative over here. I'm saying banks can manage it, but it will be a serious hit to their profitability. The stock prices will start telling you in some time.
Talk to us a bit about the immigration piece. We discuss on our program fairly often that it's clear that there's, the number of immigrants coming in could potentially be a factor in housing issues, housing affordability, could potentially be an issue as far as you mentioned earlier, because they can't afford to stay or maybe don't want to stay at the same rate that they did before. What do you make of Canada's, what do you make of Canada in the past having used immigration as a bit of a crutch? If we can't use that as a crutch in the medium term or long term, what does that look like in your view for us? And maybe where do those same people looking for a new home go instead? Is there a country you think they prefer with a similar quality of life to Canada? What do you think about that?
So Canada has been trying to, increase the population. That is the one way of looking at things. But the second most important part, which people don't realize, is that Canada's own population growth rate has come down to zero. That if you do not get immigrants, then you will have net negative population growth rate in the coming years. And then what happens to your taxation base? What happens to your unfunded liabilities? So you have a very ambitious program of having 500,000 immigrants coming to this country every year. And these are the people who are the bag holders of, who have to buy these houses, which have gone up into the value. So it's a very nice thing which has been going on for last 8, 10, 15 years. You get those people because Canada looks great from outside, Okay. So they come, they take $500,000 mortgage, both husband and wife working, basic jobs. I tell people who come over here, do not come with great expectation. You will have to start at the bottom itself. Okay. Because I got a shock of my life when I was told when I came to Canada over here that, this is not US. You have to know that you are good. We can't depend upon your CV to, feel that it is good. Whereas in US, they look at your CV, they look at your profile, say, yes, this is the level which you should be working, and you will directly go to that level. I knew this thing before coming, so I'm not complaining about that thing. But most immigrants land up at the basic jobs. These are the people who have been giving some kind of demand for on those mortgages, on those housing, which somebody wants to offload. Okay, we have kept the supply tight, which is always a builder's lobby in a lot of countries. So I don't blame builders for that. Builders will do what is for them. But when I read the statistics which came out 3 months back, that 30% of new immigrants and college educated 18 to 35 wants to migrate out of Canada because of two reasons. One is their housing cost. The cost of living, which includes the housing, has gone up. Secondly, the current political environment. That is the one which is the published data which has come out. Okay. It makes me wonder that whether we'll be able to continue having 500,000 immigrants over the next 3, 5, 10 years, simply because we are not creating small jobs, and because that is a big one, small, medium businesses starting their own, we are not creating those jobs. We are oligopolies. In oligopolies, you don't create jobs, you automate jobs. Okay. So where do I create jobs? Or what kind of jobs? Yes, I understand there are basic that, $16 jobs are available. But beyond that, if you cannot get a, high paying job and most of your salaries, most of your income goes for paying for your houses, even if you were to take a rent today, you know what rents have gone through the roof.
Yeah.
That Canadian dream is dying. The thing is, the Canadian dream is dying. That is a whole problem which I see, not today, because people who have seen last 2 years shut down in their country, okay, in COVID, some of those tough places in the world, they still believe that Canada is a good place, okay, which will continue for next 2, 3, 5 years. But beyond that, if you don't solve these problems, this is the end of Canadian dream after that. I would not have used these words 3 years back.
Mm-hmm.
I've seen that the country going on the wrong path. Politics is one part which I keep away from because I'm an economics guy. I don't understand politics, but I do understand that politics has a lot of influence on the economy. Okay. And I would want politics to have a positive influence on the economy, which is not having as of now. Purely from economics point of view, unless Canadian dollar depreciates by 20, 25, 30% from here also, it will be very difficult for us to have even foreign money coming in to buy our assets.
You mentioned, sorry.
That's where I say Canada has three choices.
And you talked about one stat earlier that the majority of the jobs created in the past little while are from the public sector. And that's a telling stat that shows you that it's difficult.
Not just the majority, it's like 82%. Is that the number, Ritesh? 82%
yes.
Public sector?
From February 2020 to June 2022, out of 455,000 jobs created in Canada, 415,000 jobs went to public sector.
That's 10% of the whole population.
Yes, and private sector jobs were 50,000. So in private sector, the small businesses were net loser in job from February 2020 to June 2022. That's Government of Canada stats.
It's probably going to accelerate moving forward too, because there's going to be a lot more businesses closing shop because of the debt that they have accumulated in the past little while, and now it's harder to service that debt. But you also mentioned twice in this interview that new immigrants coming to Canada, there's a large number of them that are not staying here, they're moving somewhere else. Is it the United States? Are they using Canada as a stepping stone to get to the United States? Is that what's being done?
That I don't know actually. Although I'm not sure about it. Getting into Canada, US these days is not an easy task. But I know of a lot of IT guys, okay, who come over here to Canada, and people don't want to move back to Asia, their country where they've come from. They go to Costa Rica. A lot of Canadians are moving to Costa Rica. The cost of living is much, much lower. Housing prices, you can buy a house on the beach at, just a good house over there, $200,000. They are giving you kind of citizenship also over there. Okay. It's a reason and very good healthcare system. Our healthcare system is crumbling now. In Alberta, it is still okay, but in Toronto and other, it is crumbling now. So I gather a lot of IT guys, who can work from home. They've been shifting their base to Costa Rica. They do not have mandates also. You know that if you are not vaccinated, you cannot move out of the country. You are actually, kidnapped in your own country, that you cannot. But in Costa Rica, you do not have those kind of things. So there are people who are taking those kind of calls. And, it crossed my mind also once. What am I doing over here? I cannot see. I did not come to this country, 3 years back, 4 years back when I came was a different country altogether. How did we get all those things so wrong? I'm not a negative guy. I invest my money. If I'm always negative, you cannot be a good investor. Okay. So it's just and making me wonder, how could we do it so wrong?
So let's talk a bit about entitlements. And one dot I didn't connect but until just now, talking to you here tonight, is if the public service, be it municipal, provincial, or federal, adds 10% of the population to its workforce in the course of about 2 years, maybe 22 months, 20 months, something like that. If they do that, Ritesh, what does that mean for the pressure coming from the entitlement side as the boomers begin to enter their sort of golden years here and live longer, presumably? Now you also have this huge set of public servants with extremely cushy pensions. That includes not just, like federal, provincial public service, but also teachers, police, fire, healthcare, all this stuff. What have you given that some thought? I mean, I almost don't even have to ask. I'm sure you have. What do you think that looks like? Is Canada's entitlement system in serious jeopardy as well?
Let me give you one more stats. 24% of all the workers in Canada are public sector workers.
Oh.
4 in 2019, 19% of all the workers in Canada were public sector workers. Now you would want me to give some kind of comparative stats also. In US, it is less than 8%. In India, it is less than 10%. Okay. Exactly at the time when boomers are retiring, they are going to be living longer. Okay. And we have this public sector, employment going up big time. The pressure will be to increase the tax base. So your tax rates over the next few years, unfortunately, will have to go up. Till now, some of the taxes could be collected from real estate bubble, because that could pay for a lot of this kind of, for the government to run inefficiently. But if the real estate prices starts moving down, okay, the pressure will come on the young generation in the form of increasing tax rates to maintain your roads, your bridges, the basic Canada network. That's why healthcare system is failing in some of the places. And that is an early warning signal for all of us.
You talked very brief.
24%, Len. 24%.
It's incredible.
I didn't know that. Oh my God.
You talked very brief about infrastructure. And this is something I was going to bring up because I'm not sure if you heard the story today in Jackson, Mississippi, but they look like they're going to be running out of fresh water. And this is as a result of aging infrastructure. And it's going to cost, from what I understand, billions of dollars to upgrade the pipes and the pump system they have over there. That's just a small town. Canada has infrastructure that is very, very dated, and it's going to require a lot of upkeep moving forward. As you mentioned, bridges, so many things will have to be upgraded over time, or else it's going to continue to crumble. This is a ticking time bomb. How are we going to be able to maintain our level of standard of living level what we have right now, and still be able to maintain paying for everything to maintain bridges, airports, everything? Is it possible, or is this just something we're going to have to live with? It's going to crumble away, and we're just going to see it. It's not going to be looking good for moving forward with driving around and everything else.
So you've answered your question yourself, that there is no choice. Over a period of time, this will start looking more aged. This will start crumbling, from the seams. Okay, you will start getting used to this kind of thing. This is not going to change, and you're not going to create a new infrastructure. That's a separate thing. That tomorrow our industrial policy changes, we attract a lot of foreign investment, there's a lot of foreign money coming in, we open our sectors, we open our oil and gas, we open our LNG terminals over there, hydrogen economy over there. Like Volkswagen is coming over here for those minerals. Okay. uh, I was very excited to see Volkswagen signing an MOU. Why? Because Canada has those kind of minerals. But I am not sure environmental lobby will allow them to extract those minerals. You can sign all the MOUs. Every country loves, politicians love to sign MOUs. But environmental lobby, I have no doubt that, even if it were to do it, that you get all the approvals, it will not be done in the reasonable period of time for which Volkswagen wanted. So we have everything that US wants, Europe wants, but we are not willing to give it to them. So how do I then I have no answers actually for this, except that to see that my infrastructure will start crumbling, coming out at seams, the roads will not be repaired in time. These things will start happening simply because the budget cuts will be coming.
We have one question here from the chat, Ritesh, that I want to ask you, and I think I don't want to say it stems from the United States, but it may, because we've heard in the last few months that auto loans are creating a great deal of pressure in the U.S. Do you have any facts, figures on? You're nodding your head there vigorously. I'm sure you've given this some thought for Canada as well. Do you have some stats there, some thoughts on auto loan pressure in Canada?
Yes. So I do not have the numbers on Canada. The problem is I do not have. This is just too small a market. But I keep in touch with a lot of people who are doing this thing. One, it was a mind-boggling thing for me when 84 months car loans are being given on second-hand cars in Canada across dealerships in Calgary. Rates have gone through the roof. Daniel Martino Booth, I am not getting the name right. Mm-hmm. She said the subprime crisis of 2008 will be the car loan crisis of 2023. And I agree with her. Now, Canada is a micro economy to US economy. I have written about some of the car loans, and a lot of my friends ask me, we are looking to buy a new car and all. I said, just wait for 3-6 months. Mm-hmm. You will see that the prices will be down 15, 20, 25%. All these dealerships, which were just buying to sell to other people, they're not hoarding those cars. Because when you see prices going up, you also want to participate in that, no? So you are holding those cars, and now you will find that the scores will start coming down. The FICO scores will start coming down as people, delay some kind of payments. Although in US, I must tell you that after this, a student loan, okay, after you have forgiven student loan, FICO scores of a lot of people will go up actually. You forgive them. But in Canada, you do not have the student loan. So FICO scores are equivalent of FICO scores will start going down. In that kind of environment, a lot of people will not be able to afford that next vehicle which they are talking about. So wait for 3-6 months. One, this market is going to blow up. Secondly, this market will see substantial fall. Already Menahem car index prices have falling off the cliff.
So is this the canary in the coal mine? It's when we see the car loan industry go tits up. Is that a point where we have to then say, okay, that's the first domino that will fall, and what's behind it is going to be just absolute carnage? Is that the point once we see the car loan industry just take a torpedo to their bow, we sell everything, put our money under a mattress, and start waiting for a good time to buy some hard assets? Is this really the canary in the coal mine?
So market is already discounting some of it. Okay, we are already discounting some of it the way what Jackson Hole was very clear. Mm-hmm. In 8-minute speech, which was supposed to be only about long-term trends, I have never seen somebody being so clear in his life. Okay, he's always been dovish. Even on the Hawkins Times, he's always been dovish, and market has already said, he's always dovish, let's buy. This is the first time he was clear. You guys are not listening to me. You will have pain. You will have a lot of pain if you don't listen to me. If they keep on raising the rates, the collateral damage are other countries actually. US is not the collateral damage. It's a very diverse economy. It's a reserve currency of the world. They still produce 13 million barrels per day. Okay. They have those LNG terminals. They have a good industrial policy where South Korean and Taiwanese companies are looking to reinvest back in US. That country will take care of itself over the next 10, 15 years. We have a problem. We have nothing of it. Okay. So when they raise the rate, unfortunately, we will have to continue raising the rate. Although the economy structure is completely different. US economy is not dependent upon housing. We are dependent upon housing. Okay. So if I were to be bearish, I would continue to be bearish on Canadian assets versus US assets.
Okay, that's a fair point. Now, Ritesh, I want to know, you've given us a lot to deal with tonight, okay? After this, I'm going to have to break my rule of no beers during the week and maybe crack open something and just think about the last 40 minutes. But my question for you, sir, is what are we doing right? We must be doing something right in order for the three of us to live here, presumably happy, although maybe not as happy as we were 2 or 3 years ago. What is Canada getting right, even under the current political regime, that you think we should be pointing to as an example for things we can really pull on as far as expanding some of those working policies into the future?
If I have to think,
oh
if I
no,
have to think, I'm really telling you, I'm normally not a negative guy, this kind of negative guy. But if I have to think, I'm not able to. My mind goes blank. I stay in Calgary, and I know that Alberta government is trying to do a lot of it. If you ask me what Alberta is doing right, I can count on my fingers. There are 5,000 tech jobs coming over here in Calgary. It's a startup ecosystem. They're trying to diversify away from oil and gas. Even if oil and gas remains at current price 5-7 years down the line, Alberta's economy will be a completely different economy altogether. Okay. But unfortunately, what happens in Calgary or in Alberta voter doesn't decide what happens at federal level. That is the unfortunate reality. So I'm very happy where I am in Calgary or in Alberta because there's enough positive things happening over here. I'm just waiting for this conservative race to be over so we could get back to our business. But one thing I have been told by some CEOs that because of H-1B visas problem, a lot of US tech jobs, high-end tech jobs have been and will come to Canada. They're not going back to Asia anymore because of IP-related issues. And that means those kind of the new jobs which will be creating will be mostly in high-end tech. Mm-hmm. Hopefully that increases the productivity of Canada. And we are what happened in Toronto, that you had a startup ecosystem. Okay, this is how you create an ecosystem. That we create a new industry where we are able to create jobs, high-paying jobs, which has a multiplier impact on the economy, which is able to take care of the taxation. These are young. First of all, these are young people who are coming over. They're not old people. So yes, they can do that thing. Okay, and Alberta is doing a lot of it. Why Toronto and Vancouver cannot do it? Because the house prices are very high. I know of Indian companies where IT people refuses to go to Toronto and Vancouver because they cannot afford it. But they're happy to come to Calgary. So see what real estate has done a difference for you over here. That we have jobs, we want people to come in, but they cannot come in because the cost of living is so high. So if we can manage that thing, we can have it with time correction or price correction. If we have a time correction, if Bank of Canada is really, really in his mind wants to do something, we have a time correction of 2-3 years. Yes, in 2-3 years, then we can become a competitive nation.
If I was somebody that's looking to immigrate out of, say, India, or pick a country in the world, I wonder if Canada would be my first choice, given what you're saying and the economic environment in the United States. There's potential to earn more money there. And I'm sure that you are spreading news to your friends and family back in India, and others are like that too, saying what it's like here to live in Canada, and it's not all that rosy for a newly landed immigrant. So is Canada in a position to attract these big, very good, talented IT people to come here and do the jobs that we need to be done, or are they going to go somewhere else?
No, they are coming to Calgary, that I know. Only because give a lower cost of living, they would come happily to Canada. They don't care about the political discourse over here. High-end tech jobs coming to US H-1B visa is a very, very difficult problem. Here, you come on a work permit, within 3 years you get a PR, and within 5 years you become a Canadian citizen. It's a very simple process. In fact, a lot of Indian companies have now partnered with universities across Canada to offer IT related courses so that people come from other countries in those courses. And once they complete that course, they'll be directly hired by those companies in Canada.
Hmm.
So, can you see that first you get your tax dollar in those universities? Okay, first they spend money in Canada.
Yeah.
Then they start earning on that, they start paying taxes. Okay, that's a very beautiful way of that ecosystem which has started getting developed. But most of it, what I'm seeing it is happening in Calgary with MRU University, University of Calgary. Two Indian IT companies have done it. Two is too small. We require it on pan Canada basis. For that, real estate prices have to come down, or we need to build more houses.
This is, Len, it's stuff we've heard before in not as much detail as I mentioned earlier. I have no other questions, Len. I feel like we pulled a lot of information from Ritesh tonight. So
I have
Ritesh,
one last. I have
please,
one last
sir.
Canada
I'd love
will
to.
have three choices. Canada will have three choices in next 3 to 5 years. Either allow the interest rates to go up to market determined level to crush the inflation. Our real estate prices goes down by 20, 25, 30%. Unemployment goes into double digit. But it cleans down the excesses. It cleans out the excesses from Canada. Canada becomes a great nation again. The second is we do not allow the interest rates to take their path simply because our banks go to Bank of Canada and starts crying that if you increase more, mortgage stress levels will become higher. We will start seeing huge defaults. Bank of Canada stops somewhere in between. They don't go to the logical extent. Canadian dollar takes a serious knock. Inflation goes through the roof. We maybe go to 150, 160 versus USD, and we become a very attractive nation for foreigners. So these are the two stark choices. The third one, the easy one, open up resource sector. Open up country for competition. This is the easiest one. Unfortunately, the easiest one is not politically acceptable. So the ball is in the hand of Bank of Canada. That's why over the next 3 years, we will have a very stark outcome of Canadian economy.
Okay, so maybe okay. You got one more, Len.
Yeah.
I want to ask him.
Go ahead.
Okay, of the three, Ritesh, I mean, the third is maybe politically untenable, but that's under the current regime, and we haven't really seen dire straits yet, as you mentioned. What's the most likely outcome in your view?
The most likely outcome in my view is that at some point of time, Bank of Canada will stop raising the rate simply because the stress will become too much. They will start seeing that economy is falling on the seam. And if that happens, that means our course correction will not be over. Currency depreciates, our inflation will go through the roof. Although today Bank of Canada is coming on Twitter every 10th day or 15th day and saying, we did not buy the bonds, we did not do the thing. You guys have got it all wrong. So they are trying to clean up their image.
Mm-hmm.
But I do not think they have the balls to take the logical outcome which should be there for an economy which has gone through. It's like if you drink too much, you will have a hangover. How do you deal with the hangover is the only question. There is no other choice. The easiest choice I've given you is the third alternative. That is the easiest choice. I can tell you that you open, if German money, if you would have said LNG supplies will be here in 3 years, today's my interview today would have been completely different than what you have heard me. Mm-hmm. I would have been long Canadian dollar, Canadian assets. It's simple. I only follow liquidity, nothing else.
There's one thing that's coming up in the next little while. It looks like that there's going to be limitation of the use of fertilizer within Canada. We see this policy being employed in other countries in the world, like namely Sri Lanka, but maybe we won't be doing it to the extent they are, but you can see the result, what happens. What's your prediction? Is there going to be a food shortage, food price spiking as a result? I'm curious to hear your thoughts about the result of potentially using less fertilizer in our soil.
So even if you don't, so let's say once you start talking about fertilizer, what is happening, okay, nitrogen usage, you go into that conspiracy theory thing, World Economic Forum and all. I only look at it from a different point of view. Global cooling. We are entering into a global cooling. If you want to read more about it, Martin Armstrong website, you can see a lot of cycles over there. Last 10 years was all about where we had temperatures which were closer to even hotter temperatures, which is more sun, which is very good for crop, increasing the yield. We are getting into a global cooling. In global cooling as it is, which he calls mini ice age, as it is, the productivity of agriculture productivity is going to go down. If on top of that we have to reduce the nitrogen usage, okay, I strongly believe we are headed for much higher agri commodity prices over the coming years, simply because there is a substitution effect. If you can't eat one thing, you will substitute to the other, and you will increase the price of the other thing also. That is the biggest problem with agri commodities, or the things which we eat, that you can substitute it. So that's why I believe that the prices are going to be substantially higher in the coming years.
It's unbelievable people don't understand the relationship between energy and ag, but goddamn, they're going to pretty soon if they don't already. Ritesh, you've been outstanding, man. Can you tell people one more time where they can find you, your Twitter feed especially, because I'm telling you guys, if people listen and watch the show every week, Ritesh has a lot of great stats, stuff that we talk about that he understands more deeply than Len and I. Certainly, he spent his time and his life's work is sort of this level of analysis. So we're happy he was on the show. Let people know, Ritesh, where they can find you.
So my Twitter handle is Ritesh MJN, but since I cannot compress my words, I'm actually write properly, explain much better on LinkedIn, and that is my preferred route. Not Twitter. Twitter is just kind of thing that you put somebody else, but you cannot explain it in that 144 characters kind of thing.
Mm-hmm.
We gotta check that out. I don't have LinkedIn. Maybe I should get it. It honestly might be worth it just for the Pinetree Macro content. I think after tonight. Ritesh Jain, everyone, thanks for tuning in, and we'll see you guys soon.
Thank you.
Shukriya.
Thank you for having me on.